please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I want to sort of get your understanding, and I was looking at your earlier note as well. I think the thumb rule is that with every 1% depreciation in the Indian currency, companies should benefit, I mean, in terms of EPS, anywhere between 1% to 1.5%. Would that be right? But within this big IT universe, who are the ones that will benefit the most at the moment with this currency tailwind?
Sure. Thank you, Surabhi, for having me. So you're right, the rupee has come at a great time for the sector. And I think also what adds to the joy or cheer this time around is that unlike in 2013, the growth rate also seems to be picking up. And we're hearing more positive commentary on demand from most companies, if not all. Now coming specifically to your question, yes, the rupee rule of thumb is 1% change in rupee dollar would give you a 1 to 1.5% at the bottom end for some of the larger companies. For some of the smaller companies, though, it could be even higher. It could be upwards of 1.5%, particularly if they have lower margins on a far more offshore-centric cost structure like Mindtree or names like that. So this 1 to 1.5% is a good buzzword. I mean, it's a good rule of thumb for the larger tier companies. Within that, you may not see it entirely translating because a lot depends on the hedged positions. So you look at for those companies that you think are relatively less hedged. In that context, I think Infosys, Mindtree, etc., some of the companies which are relatively less hedged compared to their size.
So they benefit.
So they will benefit. They will benefit probably a little bit more and show you a little bit more of that EPS upside, at least in the near term. And considering that the rupee has depreciated by almost 12%, since March, that we've been keeping the track of data, my sense is that you should see 15 to 18% flow through on impact on EPS, at least for the coming couple of quarters.
Okay, so that's straight away when windfall gain that's coming by way of these companies. But let me ask you this: when such a big windfall gain is happening, clients are also very smart, right? Especially when newer contracts are being negotiated. Do you expect there'll be a bit of tough pricing negotiation because of the factor that the rupee has become a tailwind for these companies?
So Surabhi, I think clients are not just the determining factor in this equation. I think competitiveness also ensures that.
Absolutely. Yeah.
So I just sort of hark back to 2013 when we saw the rupee during the taper tantrums depreciate very sharply from 54 to 69 in a matter of 3-4 months and stabilized at 62, 63 very quickly thereafter. So for 2 to 3 quarters, companies did show it through the margins, but it substantially dissipated within 12 months from there.
Okay.
So what really happened in this case, I think, is that whether clients led to the pricing renegotiation or whether competitiveness just ensured that. So companies themselves taken upon themselves, because if they don't, the competitors might do it and take away deals. So my sense is that, yes, you will see it being passed, the benefits being passed on to clients. They may not necessarily ask for it, but competitiveness ensures that.
So is that being reflected in stock prices? That's the next question, because this massive rupee rally that we've seen, especially towards the tail end, I think some of it was factoring in this currency gain. Is there a risk to the rupee rally given how elevated valuations are in the sector now?
So I think it depends on whether demand can improve to the extent to offset that concern. But if you assume that the demand is improving only by a couple of percentage points at best, and that does not sustain or improve further as we go next year, then I think what you're saying is right, because if the rupee starts to find a level and stabilizes around that level, in the near term you will have great flow through to EPS. But as you start passing that to clients and to your employees, you will start to see getting reflected in margins next year onwards. So potentially margins next year could be lower than this year, which the stocks are not pricing in unless the demand improves materially.
That is a big, big headline, and that's exactly the kind of forward-looking sort of understanding that we need. So you're saying FY20 could actually be a year of slight margin compression as competitive intensity picks up to sort of also negotiate with clients on the currency impact. What is the expectation on demand for this year and going into next year? And then, I'm building to the basic question that, are we close to the IT rally?
So I think,
are we close to the top of the IT rally?
No, I don't think we are close to the top of the IT rally. If you tell me that the rupee is going to stabilize to 72 here, and you tell me that demand is not improving from here noticeably, then maybe we'll be close to the IT rally. So what I would probably see is watch for where the rupee might stabilize. For all you know, it may still stabilize at 74, 75. I'm just assuming that could be a possibility. Then the stocks can even run further from here, right? But assuming that demand is picking up now, but if that pickup is not sustained through CY19 or FY20, then I think some of the valuations that we're seeing right now in the sector might appear to be full.